When you close on your all-in-one loan, one of the most common questions is, when is my first payment due? The answer? Well, it's a little different than with a traditional mortgage, so let me walk you through it. First thing, accrual of interest, or better known as monthly interest payments. Your loan begins accruing interest the day that it funds, and unlike the standard 30-year mortgage with a fixed due date on the first of each month, the all-in-one loan calculates interest daily. And that's based on your balance each night. So that means that your very first monthly payment is simply the sum of the daily interest from the day your loan funded through the end of the monthly billing period. I'll go into this a little bit in a little bit here on my board. But unlike a traditional mortgage that charges you interest up front and you would need to come in with that set amount at closing, which was a predetermined interest, your all-in-one loan doesn't charge you interest until your account is fully set up. Now, because it includes both a line of credit and a checking account, it takes time. And it could take as much as 60 days to set up your account. Your very first payment isn't due until the 21st of the month following the activation date. So, depending on when you fund and when your account goes live, your first payment will likely total more than just 1 month of accrued interest. All right, so let's talk about how we do this with the line of credit. The initial advance adjustment, or the unused credit line of your loan, and this you would have seen on your closing statement. But to make sure you're not scrambling to send in money during that window of time, the loan is structured though so that you can never advance more than 99% of your credit limit at closing. So when we close your loan, you're going to advance 99%. That means there's at least 1% of your credit line that is held back automatically. That 1% reserve is designed to cover your first interest payment. No matter how long it runs, if it ends up not being long enough, which is rare, your all-in-one loan servicer will notify you within your account once it's activated. And in that case, you would simply make a deposit to cover the interest due. So, let me give you an example. And actually, I'm going to go to the vibe board to kind of show you how this, what this looks like. So, let's take a look at the vibe board here, and we're going to go to our an example here. So, the all-in-one loan. What we're looking at is this. Your loan, your loan closes here on this date. When we close, I'm going to draw in here, this is your loan amount. So this is how much we fund you in your loan amount. So we give you this as a loan. This is what you're going to pay interest on. Now, this piece right in here, this is the 1% that I'm talking about. So this 1% is held back for us to use for your first month's or first actual payment. So example, we funded on the 5th. This is month 1. So we have the 26 days. This is a total of 26 days of interest here, right? Now, the activation isn't until the 15th of month 2. So that's when we're actually like the activation, your loan is set up. So that takes about 45 days. So this is plus 45 days-ish to get that set up. But the total number of days in month 2 is 30 days. Okay? Now your first payment, first interest charge over here, isn't till the 21st of month 3. This interest charge is the total of these 2 days, or these 2 months of interest. So here, your interest charge is going to be about 56 days of interest. We get this 56 days from this 1% up here. That is where we get the money to pay for those 56 days. And it won't be taken out until the 21st of month 3. And then after that, basically your payment is going to go into 30 days of interest for each month based on your balance. So that's how your loan is actually going to be set up, and that's how it's going to work. So to summarize, your first payment is delayed until your account is fully set up, and the 1% initial advance adjustment is a reserve built into your loan to fund your first payment without you needing to make a deposit. This design makes your transition very smooth and ensures that you don't need to worry about out-of-pocket funds right after closing. Please be patient as this process kind of unfolds and watch for additional communication from our team and our corporate all-in-one loan department. Remember, you can always refer to your closing documents when you're having any questions, or you can reach out to me for any questions that you have. Thanks a lot. Hope this works for you, and hopefully you understand your first payment.